Zillow's recent forecast of a decline in the U.S. housing market just triggered major alarms across the real estate circles. But let's look at what's really happening in the data. As there's something they're not telling you, I'm going to explain it right now. Zillow sees home prices falling this year. Apart from a blip a couple years ago, it would be the first time prices fell since the great financial crisis. Guys, this is nothing to be alarmed about. Remember, at the end of the day, it's supply and demand. They're revising this because they see a lot of uncertainty, and that very well could happen. If we are in a recession or going to recession, if we have a bad bear market in the stock market, there's a possibility that home prices could fall. But you got to remember one thing, and this is not to say it means that. The one thing I'm going to say is, it's in 1900, we've only had home prices in the nation go down one time. That was 08, 09. Now, does that mean it can't happen again? Of course not. Anything can happen. But remember what caused 08 and 09? It was very loose lending standards. Guys, you could go into a bank and say, I make $500,000 a year. No income verification, no documents required. You get a loan for a house. Now, that might be an exaggeration, but you could say I make $75,000 a year, and they would give you a loan. Does that sound like today? It's not today. You know how different today is? I recently bought 3 houses for investment for myself to rent out high-level, high-end vacation homes. My bank told me, yeah, you're done. My bank told me, yeah, you're done. So you know what I'm doing now? I'm paying cash for the next house. Now, keep that in mind. I had the cash to easily pay for all this. This is the bank that has all my money with them. And they said, you're done. That's how different it is now versus back then. Back then, I remember talking to a realtor and saying, hey, I'm going to offer cash for a house. And the realtor laughed and said, cash financing, it's all the same thing. That was different back then versus now. Today, I made an offer on a home in Arizona, and I made a cash offer, and it got their attention. If today was the same as back then, it would not have gotten their attention. Now, again, I repeat, does this mean that we can't see home prices go down? No, of course not. Home prices can go down, home prices can go up. But keep in mind that when rates were at 3% and they skyrocketed, we were the one channel to say, hey, I'm not really convinced that home prices are going to go down, because if we keep having inflation, which is why they'd raise interest rates to begin with, then that'll drive up home prices. And we also said, and guys, who's going to be selling their 3% mortgage? My wife bought a home in 2019, and she financed it in 2021, I believe, refinanced it at 2.625% locked for 30 years. I've never heard of anybody getting that rate or lower. So she got the absolute bottom of the market. Guess what I said to her? You're never selling this house. And she rents it out now, and it generates her plenty of cash. And she loves that. Now, at some point in the future, she might refinance. If the house is worth 3 times more than she paid for it, she's paid down a lot of debt, and it actually makes more sense for her to take that cash and reinvest it and get a higher return. But I won't get into that. But imagine a family out there. They borrowed at 3%, and now they want to move. They're not moving unless they have to move. Why? Because at 6.5%, 7%, that's a big difference in your price. People always forget supply and demand. If the demand goes down, but supply is down even further, you're still going to see an upward movement in prices. If demand goes up, but supply goes up higher, you're going to see prices go down. I say this all the time about these fast-growing cities that everybody insists are where real estate values go up all the time. But guys, if you have 10,000 people moving your city every month, but you also build 15,000 units, you're going to have a supply problem. That's why Arizona had a 70% drop in home prices, or whatever the number was, in 2008, because they overbuilt. That was the big issue. Now, also remember, Zillow's adjustment doesn't mean a crash. Stop talking about this crash. Just because prices go down does not make it a crash. It's so funny to me, same in the stock market. Oh my God, stocks crashed. They're down 8%. What do you mean they crashed? People have these over-dramatic ideas of what a crash is. You know how bad a crash is? Blood in the streets. When I say blood in the streets, nobody wants to own something. That's blood in the streets. Over the last several years, home prices have gone up because inventory has been down, because people cannot sell their 3% mortgages. They can't afford to buy the next house. Now, where's it going to go from here? I have no idea. Are we in a recession? Looks likely that we are, but I have no idea. Do recessions really matter? Maybe. Depends how deep it is. We don't know the future. But all I know is what media is going to do is they're going to sit there and put in the media whatever sounds craziest. Guys, this is a crash. In the great financial crisis, home values fell year over year every month from July of 2007 to June of 2012. That's 5 years of every single month prices being lower than the previous year. This is a crash. A crash isn't, oh, prices fell 0.2% from last year temporarily. That's not a crash. If you think that's a crash, you're not meant to own a home. If you think stocks going down a few percentage points quickly is a crash, you're not meant to have stocks. There's far more going into the economy and to prices than anybody can really understand. So what you need to do is get a principle-driven approach into investing. Understand what drives things in the long run. And in this country, what drives real estate values is incomes going up. What drives incomes going up? The devaluation of the dollar. As long as we keep printing money, inflation will be higher, incomes will go up higher. Even if we stop printing money, inflation still exists. People still want to make more money. We pay more money. We charge more money, etc. That's what drives home prices up. So if you own a home currently, you have to ask yourself, what's the value of this home going to be in 20 years? Well, if incomes go up over the next 20 years, you think incomes are going to double or go up 2.5 times, your house will likely follow the same trajectory, no matter if your city is growing or not. The example I always give is Youngstown, Ohio. In 1980, the average rent, and by the way, rent and home prices go up together because they're going to drive one each other. If rent is super cheap, people are going to buy houses. If rent's super expensive, people are going to buy houses. It works all the way together. But in 1980 to today, rents in Youngstown, Ohio have gone up 4.59%. This is a city that has lost 18% of its population since 1980. The MSA has. Dallas, Texas has tripled in size since 1980, and their rents have gone up 4.79%, not much higher. So it doesn't matter where you are. Devaluation, incomes go up everywhere. So if this opened your eyes to how real estate investing really works, this next video is where it's going to all come together. It's our full course. We walk through everything step by step so you can actually start buying one great property per year. And the great part is that one property per year can make you fabulously wealthy. Click the video on the screen right now. I will meet you over there.